guys, Kurt here. So today I'm going to be doing something brand new for the BBT community. I would like to introduce Beyond the Basics with BBT Traders. What we're going to be doing is I am going to be fielding questions from traders within our community. So whether that be you have questions regarding a specific strategy that we utilize, whether you want to learn about how to overcome different psychological issues, or pretty much anything day trading related, you can send me an email and I'd like to set up a meeting with you. And what we'll do is we'll have a one-on-one discussion regarding whatever specific topic you would like to talk about. So that being said, in today's episode, I received an email from Blake H. And Blake has been a member of the community for a little bit of time now. And he had reached out to me specifically asking, how do I go about finding stocks in play? So finding stocks in play and finding the stocks that are going to make the best potential moves is one of the most important things that you're going to learn how to do as a day trader. If you're trading the wrong stocks, you're going to find that the setups that you're utilizing often aren't going to work all that well. So it's really important that when you're picking a stock to trade, that it is a stock that has some form of specific catalyst. And whether that catalyst is a fundamental change within the organization or some form of technical setup, we'll go into those details just a little bit here. But first and foremost, I would like to introduce Blake. And Blake, go ahead and say a few things about yourself. Why did you get into trading and things like that?
Yeah, I kind of started doing a little bit of my own research when it came to investing, and I'm kind of into the video game scene a little bit myself. But like long story short, I kept thinking to myself, I'm like, why don't I invest in this stuff? And then I started thinking about, what about shorter term investments? And then I started learning about swing trading and then day trading, and I just started kind of picking videos on YouTube, stuff like that. And I came across the BBT community after about a month or two of kind of, dabbling around here and there, and just, really love the content, like the pre-market show and just all the recaps that the community puts out, all the moderators, and then even just the free content that you guys make available, on YouTube. And then I actually finally joined the BBT community at the beginning of September this year, and then just was amazed at how much more content was like, and really top-notch stuff is on the website. But I guess one of the concerns that I had is I kind of know, I have a good idea of which stocks that I, should be kind of trying to pick. And for, I guess, anybody that's in our community, they might just say, well, just look at the gappers list, dummy. Like, you just pick those, right? But I just found that like some days, you've got like two stocks on there. So you're like, okay, I have basically two stocks and one might have some news. So you're like, I have like pretty much one stock to watch, But then I started noticing that a lot, like, most of you guys, the moderators in the chat room, like you'll post your watch list and there's like, 2 or 3 or 4 different tickers that you're watching. And I'm like, oh, I wonder where they found those. I didn't notice those on the gappers list. Or when we have days where there's like 1,500 stocks on the list, it's like, which ones do you pick? And I guess it's kind of a matter of just parsing out, which stocks appeal to you. But then I started thinking, I'm like, well, I guess how do I go about that? I can look at different people's watch lists, but I'm just like, well, what are their personal reasons for choosing these companies to trade on this particular day? So I watched the last couple of videos that you had made, your recaps on YouTube, and noticed that the last 3 days that you traded, like you just had found really good stocks to watch, like really good tickers, and had done really well trading off of some of the pre-market levels, and just even identifying like which ones to trade in particular. And I was like, I gotta pick somebody's brain about how to do this better. So here we are.
Awesome. Well, thank you for that. So, like Blake was saying, it's not something that, just Blake is specifically struggling with. I was there, right? That's one of the things that, especially as a new trader, even if you have the software and you have your gappers list, well, it's, why is this stock moving and why is there a lot of volume in this stock instead of this other stock that, you're potentially looking at? So we're just going to go ahead and dive right in. So for those of you out there who have read Andrew's book, he has a list of things that he looks for before he selects a stock that he's going to play. So first and foremost, and this is built into our trade idea scanner, is we're looking for stocks that are gapping up or down 2%. We're looking for stocks that actually have volume in the pre-market. We're looking for stocks that have a catalyst, whether that be earnings or some other type of news. And we're also looking for stocks that have relatively clean pre-market activity. So even if the volume is semi-light, if there's a really clean pattern on there that we can trade off of, that's something that we're going to be looking for. But that being said, if you're looking for stocks that are going to potentially, and that's a keyword, potentially, right? Because up until the market opening, you have no idea what a stock is going to do. You can have an idea and you can build that into your trading plan, but until you start to see the price action develop, you ultimately it's up to the market. But if you're looking to trade stocks that are going to get those clean moves, that are going to have the support of, buyers or sellers, depending on, which way you're looking for the trade to go, it's really important to find stocks that are in play. Okay. So in play, the definition of itself is basically saying that this is a stock that people are trading right here and right now, that it has higher relative volume. If you guys remember, William and Andrew did the interview with Mike B from SMB Capital, and one of the things that he focuses on and his firm focuses on is relative volume. And relative volume is just how much volume is occurring right now at this specific time in comparison to its average previous days. So at 9 o'clock in the morning, how is the volume in comparison to 9 o'clock in the morning yesterday or the day before? So that's one of the most important things, is making sure that it has high relative volume. When you look at all the trade ideas scanners that we utilize outside of the gappers watch list in the morning, we have relative volume as a qualifier. And the reason why is because that's the most important thing, is that if a stock is trading low volume or normal volume in comparison to how it normally trades, you're probably not going to get the really clean price action. You're probably not going to get the really big moves. So I came up with a list of things that I kind of look for whenever I am going through the list of stocks every morning. So obviously we have our gappers list that we utilize. But in addition to that, I'm also browsing various news sites to try and find things that may have news. So I'm hitting up Market Watch, I'm hitting up FinViz, I'm looking through CNBC, and I'm getting all of their notifications, because a lot of times stocks will have news, but sometimes they won't necessarily be gapping up or down 2% quite yet by the time the news hits. Sometimes it takes a little while for the market to digest that information. So the first thing I do when I get to my computer every morning is I log into CNBC, and they have what is their, what's moving in the market list. And I'm not going to make any decisions based off of what I'm seeing there, but it's at least going to give me something to look at. Then I'm going to be going to the gappers list, and I'm going to be looking for those stocks that are gapping up or down 2%. Okay. Now, in addition to that, let's say I have a list of 15 or 20 stocks. Like you said, like sometimes the morning can really be overwhelming, especially on days where if the market is gapping up or down, that list is now 70 stocks, right? It can just be absolutely unbearable trying to go through all of them. Yep. So things that I'm specifically looking for is I'm looking for stocks that have earnings. And specifically, they have earnings beats or misses that are substantial. So I like to look for stocks that are beating their earnings by, 10% or missing their earnings by 10%. Okay. So I'm looking for companies that beat their revenue, right? So when it comes to earnings, once again, when they give out their revenue, I want them to either beat or miss their revenue by a lot. So if a company is projected to do, $1 billion in revenue and they do, $1.5 billion, that's a pretty substantial beat, right? So that's something I'm going to be looking at. I'm also going to be looking for stocks that have a very high short interest. So 20 to 30%, anything higher than that, if I see that on the gappers list, I'm going to be interested in it. And the reason why is that when you have a high short interest, that means there's a lot of people who are short that stock. And especially if something gaps up, there's potential that these guys, depending on where it gaps up to, if it gaps over significant resistance levels on the chart, there's going to be a lot of people short who need to decide, Am I going to get out of my position? Am I going to add to my position? What am I going to do? So by having those extra people who are now paying very close attention, you can get some really explosive moves that normally wouldn't occur in like the normal trading. So I'm also going to be looking for stocks that have really clean daily charts. And what I mean by that is I'm going to be looking for stocks that have either trending daily charts, so a very clean uptrend, a very clean downtrend, or I'm going to be looking for stocks that are hanging out near support and resistance levels, significant support and resistance levels. And that's something that we'll go over a little bit later on today to show you what exactly I mean by that. So I'm looking for stocks that have released a new product or have announced a new partnership. Because when you think of a catalyst in general, these catalysts need to be something that are changing the fundamentals of the company. So earnings is obviously, if they beat their earnings and then they raise their guidance, that's changing the fundamentals where now people, big firms, whether they be hedge funds or, they be, big banks, they're going to need to adjust their positions. Are they going to start selling here? Are they going to add to their position? Are they going to be getting in for the first time? Because now suddenly AMD looks like a really great company because they have a new partnership with Google or something like that. So that's why I'm looking for new products. I'm looking for new partnerships. All of those things can and will potentially heavily influence stock's price. So another thing that I look for is FDA releases. So if a biotech company, if they come out and they say that they've passed clinical trials with the FDA, phase 1, 2, or 3, or they've gotten FDA approval, a lot of times it could potentially be built into the price already because the way that the FDA does things is usually when a company is going to get approval before it happens because it has to go through the advisory panel and everything like that. But that being said, I'm looking for news that's FDA related because that can have a huge impact. And we see that very common in like the low float stocks where they'll get FDA approval and they'll go from a 37-cent stock to, $10 and then all the way up to $60 for some reason. Then they go back down to 30 cents, a month or two later. But that's definitely a catalyst that I'm looking for. Okay, so the next thing I'm looking for is upgrades and downgrades. So you have to be very careful with these because there are a lot of analysts out there and there are only a few that I'm really going to rely on. So primarily I'm looking for the big banks, right? I'm looking for the Bank of America, the JP Morgan, the Goldman Sachs, these guys that actually have billions and billions of dollars in assets when it comes to the money that they're managing. Because their analysts, when they give an upgrade or a downgrade, that often means that their brokerage firms have to adjust their positions. So if Bank of America comes out and says, we're downgrading the stock, we don't like it anymore, that means that they may now have to start dumping that position, which could give you a really clean, downtrending day. That being said, there are a lot of other analysts out there and I don't rely on them unless I start seeing, 3, 4, 5, 6 analysts all at the same time. So we get downgrades and upgrades all the time. I would not just rely on a single upgrade or downgrade to necessarily tell me that this is the stock that I want to play. I brushed on this briefly a little bit earlier before, but guidance. So sometimes, during earnings especially, they will come out and they will revise their guidance. Maybe they'll give better guidance or maybe they'll reduce their overall guidance. These are things that are going to make the stock in play again, because obviously if the company says, we thought we were going to do $100 million in revenue that, next year or this quarter or whatever it is. Now we say we're actually only going to do, 60 million. That's a bad sign. They're drastically reducing what their guidance is, and that's going to adjust the stock price. Another thing that I look for is government investigations. So SEC, FBI, things like that, right? Do you remember, oh God, I can't remember what company it was. But anyway, it doesn't really matter, right? If a company is being investigated by the federal government, that's probably not a good thing.
It's probably not good news.
Yeah, exactly. So unless you're Facebook, because like nowadays it doesn't
Yeah.
matter, you can't keep that stock down.
They have $5 billion in their pocketbook that they can pay that stuff with. Like, no problem.
Yeah. So, but typically speaking, we look at that. So, oh gosh, what was the company? Gosh, they started the fires in California. What was it? PG, I can't remember, whatever it was.
Oh my goodness. I know what you're talking about.
But when it came out that they were being investigated for starting the fire, they went from a $50 stock down to like a $15 stock over the matter of, a few days or a few weeks, whatever it was. So, these are types of things that you look for because it's going to drive the price in a certain direction. And another thing that's really important to note with Catalyst is it's okay to get a bias because of the catalyst, but the price action needs to confirm your bias, not your bias needs to drive your trading. Because the problem is that if you are, you really like Micron for whatever reason, and, they gap down 2%, and maybe it's earnings news or something, but they really beat their earnings. Like, oh, this is just a sell-off because it's just a sell-off, right? That sometimes it happens after earnings, companies go down instead of up after beating expectations, and you start to buy into support and it drops, and you say, okay, well, it's probably just dropping a little bit, so you add to your position, and you add to your position. Next thing you know, it's down 6%. And if you let your bias overcome your understanding of the stock market and reading charts, you're going to have a bad time. So make sure that, once again, it's okay to think that a stock is going to go up or down, because ultimately you should have a game plan before getting into a stock. Unless you are a short-term momentum player. So Andrew, for example, Andrew doesn't care whether, what the catalyst is, because he's just solely relying on looking at the tape, looking at the level 2, looking at the chart and saying, this is where it's going to break out. And maybe it breaks out for 30 cents, 50 cents, $1. But, by the time it pulls back, he's already looking at another stock, right? Because as soon as it loses momentum, he's out. For people who want to hold stocks a little bit longer because they want to get this trend continuation play, you have to have some sort of game plan in mind, because if you want to get into DocuSign at 54.75, if it pops up to 57, that doesn't mean that, okay, I can walk away from my computer now, I'm done. You have to be very careful and make sure that you're going to be taking profit at these specific levels, because otherwise you would have found out that you would have lost all of your gains by not doing that. So let me see if I missed anything. I already talked about volume. So another thing to look for is if there is a change in leadership. That's another thing that can sometimes be significant. So especially if there's some sort of scandal involving it, right? Where the CEO, it turns out that he's been embezzling money, or, something like that, where that's probably going to hurt the stock price. It's probably going to drop it down. So keep a lookout for that. If you see that there's something going on, that may give you a stock that is in play. I'm just going to go over my list one more time, make sure I didn't miss anything. Last one, and back towards earnings, margins. So if a company comes out and they adjust their guidance for their margins, saying that they're going to be making more pennies on the dollar for the product or service that they're selling, that's a good thing too. So if they're manufacturing a product for $10 and they're selling it for $20, but then they come out and say, actually, now we're manufacturing it for $6.35 and selling it for $20, that's good news for them, because that's gonna increase their bottom line, obviously, assuming everything else stays the same. And really, the last thing is going to be like market share. So you look at companies, and we'll use Netflix as an example. For the longest time, Netflix was the only company that was a streaming service. And if you look at their stock price in the past, you could definitely tell that was a $300, $400 stock. Now, there are a lot of companies that are getting into that field. We have Hulu, which is owned by Disney. And obviously we have Disney Plus. We have, there's just so many. I mean, HBO has their own thing, so that, you know, it's just, there's a million of them, right? So as market share was decreasing for Netflix, there's a good chance that their market price is or their stock price is probably going to decrease as well. So especially if they come out and say that, you know, we thought that we had 60% of the market, but it turns out we probably only, you know, we're expecting to only have 37%, that stock is probably going to drop. So
Right. Yeah.
when you're going through your gappers list every morning, it's really important to try and find these things, because a stock could gap up or down for what is basically no reason whatsoever. And once again, specifically if the market is gapping up or down. So by narrowing down your list of 10 or 15 gappers, by figuring out which ones have a real catalyst in play, that's going to give you the best indication of where the big money is going to be and where other traders are going to be. You know, if Tesla comes out and says that all of their factories burned down, you should probably be trading Tesla today, because there's a good chance that Tesla stock is finally going to go to zero. I'm sorry, but those are the things that you should really be looking for. And now what I'm going to do is I'm going to show you things that I'm looking for when it comes to the daily chart, because the daily chart is going to give you a really important understanding of how the stock is potentially going to be in play and for giving you entries. So let me share my, so what I'm going to do is, you got your DAS open, right?
I do.
Okay, perfect. So what we're going to do is we are going to look at DocuSign. So DocuSign was a stock that was in play on Friday, and we discussed that. And so just so you know, for their catalyst, they did have an earnings beat. So when I first pull up my stock, the very first thing I'm going to look at is I'm going to look at the daily chart. I'm going to see, okay, where is this thing sitting? Where has it been? What is the trend? What are some of the significant levels that could potentially impact the price? So, and let me just real quickly, I just pulled up my list from yesterday because I have all the levels written down, so I don't have to do it again. But so first and foremost, like I said, we had earnings beat. So what I'm going to look for is I'm going to look for support and resistance levels that I can use as potential entries and exits. So the very first thing I see, if I'm looking at DocuSign, we know that it gapped up to around $55 in the huge. In the open. So first thing I'm going to look for is, okay, let's say this thing is going to be a long. Where could it potentially pull back to? And that's how I start my day. Because when something has a big gap up like this, I'm probably going to be looking for a long trade and not a short trade, because there's a reason why it just gapped up 20%. So by looking at the daily chart, the first thing that I see is actually, let me, if you look at the pre-market, let me see where the pre-market level is. The first pre-market level that I really see acting as potential support is all the way down at like 51. If you see that candle right in the after hours. So it's right around 51. That's the first thing I'm going to mark. And that kind of gives me my basis of where I really want to be looking at the daily chart, because anything beneath that, it's probably not a long anymore. If it loses its entire gap like that, there's a good chance it's not coming back. So from beyond that 51 level, you can see that on July 26th, you have this candle at 54.75. You see how it's kind of the top where it bounced off this level. We have it bouncing off of it June 6th. We have it bouncing off June 20th, 21st. We have it bouncing off of July 25th, 26th. Yes. So this is the first real level that I'm going to look for it to pull back to. Why? Because when a stock gaps up, what typically happens is that it's usually going to have some form of pullback. Now, you will get what is basically called the gap and go, where it breaks over its pre-market levels and never looks back. But that's a momentum trade, and that's typically not what I'm looking for. I'm looking for something to pull back first. We get people who have been in this position, especially those, if you have someone who bought in August, right? You have them buying down at 45, 44, 43. So people are going to sell. You'd have to be absolutely crazy to have bought this stock, a week ago, be up 20% and not take something off. So it's pretty standard for there to be some form of pullback, especially in the market open. So let me, one second here. Need to move this chart over so people can see it. I just realized that nobody can see it right now. So that's okay. So we've got this. We have this first level that I marked, which is bouncing off of this area here, here, and here. So after I have my real daily level that I'm looking for, I am going to look for other levels that could possibly act as support and resistance. So you can see that we have what would have been the low of pre-market down at, where was the low of pre-market? Let me see here. Other than that one that I marked. One second here. So we have the low of pre-market, and we're just going to go ahead and say that that's basically yesterday close. So we'll say like 46.30-ish. I think would probably be like a safe place to mark. The reason why I'm marking that one is just that I have another level that's significant. And now what I'm going to do is I'm going to look at the pre-market activity and see if there's any real buying or selling that I can see in the pre-market, because that will help give me potential targets or potential areas to entry. So we have this level at 54.76 marked. What I'm also going to do is we have the level at from around 1700 at 57.50. I'm going to mark that one up there. And then I've also got this level at 57.80-ish, which is a pretty important level. You can see how it bounced off of that at around 8 o'clock. So these are all areas that I'm possibly going to be looking for to exit some of my position, because I know that if I'm buying down at 54, if I get a move all the way up to 57.50 or 57.80, I'm probably going to be in a really good place. So another level you have is from around 9:10. You see how it bounced off this level and then started selling off. It's around 57.25-ish, 57.30.
Yeah.
Okay, so that's going to be another target area that I'm going to be looking for. So if we go back and we look at how it actually played out, so we're going to go back to the 1 minute chart here. I have all these different levels that are marked. And in turn, you can see that, and this happens very, very frequently. It's actually incredible how often this happens, where we get our first pullback, and you can see that it comes down to this daily level to the penny, this 54.75-ish level, and it tests it once, twice, 3 times. You could have gotten in there at any point. You set your stop 20 cents beneath that level, and you wind up catching from 54, we'll say 54.90 of your entry, all the way up to, you're going to be partialing some at high of day, which is 56.39, and you're definitely going to be partialing up at this other level that we have marked, around 57.30. So you wind up getting, a $2.50 move just based off of levels that you pulled from your charts.
Yeah.
So let's look at another one from the other day, Lulu, because this is another good example. So Lulu is going to be a little bit different though, and the reason why is that this is a stock that isn't beaten down. This is a stock that has been trending very, very nicely on the daily chart. So if you zoom all the way out, you can see that there's a pretty clear uptrend, that it's been, for the most part,
this is all-time high, right?
Yes, this is at all-time high. So when you're looking at a daily chart like this, obviously we're going to go and look back at it, and we're going to say, okay, we'll mark the bottom of the gap, which is around 189.20 from where it closed the day prior. We're going to mark this 194.40 level that you have from July 31st. And if you really want to throw another one in there just in between, from August 1st, you can throw that level in there at 192. So basically I've got 190, 192, 194, and then I'm going to look once again at the pre-market activity and see, okay, where can we catch some potential support? And so besides the levels that I already had marked, which if you mark them on your side, you'll see that they bounce off these levels fairly well.
Yeah, it's crazy how they respect those. Like, it's
exactly.
Like Andrew says, they're just magic, right?
Yeah, exactly. Because this is all traders can base their information on, right? If they're not reading the tape, and how you read the tape in the pre-market when something is trading, potentially 2 shares. This is all you can really go off of, so you have to mark levels. So another level that I potentially see is around 196.50. We have at around 1725. It bounced off of this level, and you can also see it around 750 and 8 o'clock. It bounced off of this level as well. And then we've got the high of pre-market. And then finally, we have this 198, I would say 198.60 level. You can see how at around 855, it kind of held this level. It got beneath this level a little bit around 9 o'clock. And then it tried pulling back up to this level at 923. It bounced off of it. And then it opened. And you can see that when Lulu first opened, it ripped over this level. It did not reject it whatsoever. But if you look at the pullback, even though it's beneath VWAP, look at what happened.
The third minute.
Yeah, you've got minute 3, minute 4, minute 5, that they all respected this level. So same thing. When you're buying off of these levels, it's very tough to just go in and just buy the first time it hits it. But when you get this consolidation and where it's clearly supporting it, especially as you're starting to see increased volume on the 1 minute chart, that's a very high reward, low risk trade. Let's say you get in a little bit late. You get in at 198.75. You set your stop down at, let's say 198, I don't know, 198.30 or something like that. So you have 40 cents risk. You wind up getting a $6 move out of it. And it never comes back to test your entry.
This thing moved like crazy. I remember that.
Oh yeah. If you played it well, I mean, you can see that there's actually there's a bit of a triangle that wound up forming, and you can see that when it lost the triangle, people tried selling, but then it got bought right back up. So it's, this just goes to show that this is exactly the type of stock that you want to be getting into. This is a stock that people are here supporting the levels, making sure that it continues higher, or, whichever direction that, they want it to go. So these are the type of stocks you want to get in on. These are the stocks that are going to have big money behind it. And in turn, these are the stocks that are going to give you some of the best R to R trades.
Right.
So that being said, do you have any questions for me? I've been talking now for about 30 minutes. So it's been a little while. Not too bad though. So that's one of the things I want to do with this, consulting with Kurt, is it's important for you, if you have any questions, to go ahead and ask them, because if you have questions, there's a really good chance a lot of our other members and a lot of the people who watch our YouTube videos are going to have those questions as well.
Yeah. Well, the main question I think that I have is with the catalyst. I remember watching some SMB's videos with Mike and Steve, and they definitely talked about the catalyst. They talked about earnings, revenue, and then I think Steve Spencer talked about guidance being really important, like about big money wanting to get behind that. So you touched on that. I think the RVOL, or the relative volume, that's something that I understand it, but I'm kind of wondering, because I see people trading a whole bunch of different stocks, and sometimes, maybe the RVOL isn't slightly higher than 1, so it's not really trading at higher than average volume. So I guess, I'm just wondering how that kind of comes in. Like, if you're looking at, let's say, 3 or 4 different stocks, are you going to kind of focus in more so on the ones that have a little bit higher of a relative volume?
Yeah, of course. So when I'm looking at my stocks in the morning, so one of the things that I do is I will look at their pre-market activity, and I'll compare it to their daily volume. So if a stock has traded, a stock normally trades, let's just say 1 million shares on any given random day, and it's done 500,000 shares already, that's 50% of its daily volume done in the pre-market. That's going to be a stock that's in play because a lot of people are trading it. And same with relative volume. So RVOL. Unfortunately, DAS doesn't have a way to track RVOL. However, Trade Ideas, I actually just made a scanner for that. And if you want it, just send me an email. Do you have Trade Ideas or no?
No, not yet. I've just been using off the chat room.
Okay, so I did give Andrew that scanner as well. He's going to take a look at it. But so with relative volume, I believe FinViz, you can look at relative volume on there, but I do believe it's delayed a little bit. But so RVOL, sorry, go ahead.
No, I was just going to say, that's what I have been doing, is just kind of briefly looking, just checking things out, like looking at, if I can't see the ATR for whatever stock, like if it's hasn't hit the gappers list yet, I'll usually just go to FinViz and I'll kind of check out a few of those other numbers on there. But yeah, relative volume definitely being one of them.
Yeah. So you want to trade stocks that have relative volume. And the reason why is that no matter what type of trader you are, whether you're a longer term intraday trader, like a trend trader like me, or if you're a momentum trader, one of the things that we rely on is the chart, right? So there's only a couple things that you can realistically look at. You can look at the level 2, you can look at the time in sales, you can look at your chart, and chart, that's going to be the candles and the volume. And then you can look at whatever indicators you use. So whether it's moving averages, VWAP, MACD, whatever, however you trade, doesn't really matter. But that being said, patterns are going to happen in the market all of the time. So an ABCD setup can form all of the time, anywhere, in any stock, whether it's AMD, Apple, Google, or Dynavax, which is like a $4 stock that nobody trades ever. Those patterns can form. So the issue with just solely relying on patterns themselves is because of that exact reason, that they can just form. So when you're trading a stock that has high relative volume, that means that more people are watching it. And if more people are watching it, that means that more people are likely going to take the setups that form. So wedge patterns or triangles, head and shoulders, double bottoms, whatever it is. If every trader and their mother is staring at the stock, what are they going to do? They're going to take the damn trade. Whereas if there's you and, Billy Bob over in Texas, if you guys are the only two watching it and trading it, it's probably not going to work. Does that make sense?
Yeah, for sure.
Awesome. Cool. Any other questions for me?
No, not right off the top of my head. Like that criteria, that's kind of what I was wondering, is like just how to differentiate, I guess, between them, because some of the stocks sometimes will have news articles, but I guess which ones to give more weight to. Mm-hmm. And then, how to, I guess that just having like a game plan. And that's exactly what I was looking for. Yeah. So
perfect.
That's good.
So the last thing I'm going to touch on is we're going to be coming into earnings season here pretty soon. And what that means is that we're going to start seeing a lot of stocks showing up, a lot of stocks that are going to be in play. And that's why it's so important that when you are looking to see whether or not it has a catalyst, you also take the time to see what that catalyst is and get into the mindset of thinking, how is this catalyst going to affect the overall price of the stock? If they're blowing out earnings, if they're crushing earnings, if they're really just ramping up their guidance, saying that they're going to double their revenue or something like that, that's going to have a huge impact on the stock. Most recent example that I can really think of is Target. So if you go and look at Target's daily chart in comparison to where it was before they had their earnings, where they killed online sales. Like, it was just absolutely ridiculous. They were an $85 stock, and 10 days later, now they're sitting up at 110. And the reason why is because there was a fundamental change to their company. They are doing way better, especially in a time where Amazon is king of absolutely all things retail. The fact that Target was able to do what it could do is a good sign for it, and this is how the market repays it. So right. Great. Well, that being said, I hope that this was really beneficial for you and for all of you out there on YouTube who are watching. I hope this helps. As always, if you have any questions, feel free to reach out to me directly. And Blake, same goes to you. If you think that we missed something, if you have any follow-up questions, feel free to reach out, and I will get back to you as soon as I can. Thanks, guys. And once again, Blake, thank you for joining me today and chatting with me about these different catalysts that we need to learn as day traders.
No worries, man. Thanks so much for having me on. It's very, very helpful. Hope it's just as helpful to the other traders that watch the videos.
Awesome. Thank you.
Cool.
If you are interested in joining me in a discussion on a day trading topic of your choosing, please send me an email to kurt@bearbulltraders.com. Please be prepared to provide me with your bearbulltraders.com username.